Hey, what's up, guys? It's your boy Double Seven Wall Streets. It's Saturday, so we're just taking a look at what the market is looking like next week. Last Friday, we took the look to the market, and I thought that it looked kind of bearish. You could have seen a downtrend, but the thing that was iffy to me was that the dollar index, which is one of the gauges I use to see the market. Um, as an indicator as well, is that the dollar index had that small bounce, but it looked like a weak bounce, like I said last week, and that could mean like the market could be recovering a bit next week if the dollar index doesn't go up, and that's exactly what happened. We had this tiny bounce, right here, and it was really weak. It should have been somewhere up here, and should have been coming up to this level at least, but it looked so weak and didn't close so well. And that's where I figured, like, I was worried that the market wasn't going to go down as expected. So that's why I generally don't like to short the market too much, because it's so hard to time the crash of the market. The best thing you can do is just be ready for it. Just reduce your position size, and just get more time on your trade, and just be like more vigilant in terms of your position sizing and hedging it properly. So let's take a look at SPY as well on the bigger chart. Kind of like we talked about here. How we saw like two red candles right here. So last week we saw two red candles, which usually was signaling the downtrend. But obviously that didn't happen. We came back up, and we had a nice 4-day run, because they kept talking about they were gonna pass this COVID relief bill, and they're going back and forth for like a whole week or two now. But they keep saying, yeah, we're gonna pass it before next year. We're gonna make it happen 100% and whatnot. But we're really not seeing it, man. And it's really annoying. Got some pretty big sell-off on Friday. That was like kind of scary. But we ended up recovering at the end of the day. So that's the SPY for you. XOF, actually, this chart is a little delayed, right? Didn't reflect the after hour data, but in the after hour data, XOF actually gapped up, because one of the crazy news in the market was that the Fed, showing confident in how banks are weathering the pandemic, gave them a green light to resume billions of dollars in stock buybacks. So JP Morgan and Goldman Sachs says, hell yeah, we'll do it. So that's something that's pretty wild. And that's good for the financial industry in terms of XOF, because when they allow banks to do buybacks, what that means is that it's gonna allow the banks to buy their own stocks so they can jack the price up. So we're expect to see some type of sector rotation back into the financial industry, the banking industry. Some of the bank stocks might have their turn for the run now, whereas QQQ and the rest of the market, or even the small caps, are making the run. I think in the coming weeks, we'll probably look for the banks to make that run, to pass that COVID level here, and then to go up a little bit more, where like SPY did. Where SPY, we had passed the year high, and now we have gone up a little bit more. So we're probably looking for trades and next coming up. I actually talked about this XOF trade a while back. I think maybe even a few weeks or a few months back. If you guys are watching the video, you probably saw at some point that I thought that almost every industry was gonna come back to this March levels. Just on the simple fact that if the S&P 500 could come back to these levels, every other industry, every other sector would probably do it as well. With the exception of the cruise industry. But even that industry actually has gone back up because the way the ETF are priced, there are some stocks in there that made it run back up in the consumer discretionary sector. So QQQ also continues to run as well. It had that double top rejection right here, and then just kind of forgotten about it. Just kept grinding up. So that's been a pretty hot run. What else is affecting the market? So we have some other stuff that's affecting the market as well. In terms of like, we're about to have the worst month in COVID. We're getting the stimulus talk and vaccine talk. Oh yeah, the biggest thing this month was probably the talk about what the Feds are gonna do. So Wednesday we had a Fed meeting, and the Fed said they're gonna continue to let inflation run wild. They're not expecting interest rate to go down to zero until 20. They're not gonna let interest rate go up from zero until 2023. So there was a lot of talk. There was a lot of people on Twitter. There was a lot of bullshitters. A lot of like new Wall Street wannabe guys, and they're talking about how, oh yeah, economy's doing so well, stock market is back, that the Fed is apparently gonna jack up the interest rates. But no, that's not the case, because economy hasn't been doing well. Economy is still in this gutter that we had gotten into since March. And the Fed, but the thing is, the Fed's been buying like crazy. Look at the Feds. They're like, look at them buying here, and then look at them buying here. They're up to $4.5 trillion in buying. That's pretty crazy. That's been like providing a lot of liquidity to the market. Just backing up a lot of the banks and hedge funds and stuff as well. So that's something that interesting that we're looking at. It's hard to really say where the QQQ is gonna go next week. This is there's no re on it, to be honest with you, on this. There's some momentum coming in. It has gone up. It'll probably come back to test the top. That double top I was talking about, will probably come back to test that as support now. So that's around the 303, 304 area. Since that was a previous resistance, that will become support coming up. As far as SPY, let's see. So we got another kind of like a red close, and that's usually that means we could see some pullback on Monday maybe. But with the after hour news, when the Fed allowed the banks to do stock buyback, that might just be bullish enough news to run the whole market as well, in terms of like the S&P 500 sector. And plus we have the Tesla inclusion coming up. That's going to be pretty scary, because the whole reason they didn't want Tesla to be included in the S&P 500 was because they said it was too volatile. It was too wild. We can't have this. And suddenly they decided, hey, you know what? We're going to let them in here. Apparently, we're going to let them be added to the S&P 500. And Tesla's one of those companies that's been able to move a lot. Some days it can move $50, $100, and moves like that could affect the whole market, because now that they include it in it, it's gonna be very interesting to see how the market goes from there. And God forbid, like, people start attacking Tesla again. Like, I remember a year or two back, Tesla was getting a lot of short attacks, and you would see back to back articles just shitting on Tesla, like generating a lot of FUD and fear and uncertainty for a lot of people, right? And that had caused the Tesla stock to go on a death spiral for a while. So let me show you. Where was that? Family. So Tesla's gone so parabolic, it's almost hard to like see in the chart, but it's probably here, over here. So that was in 2018, December 2018. There's just so much bad articles and went on weeks and weeks. Look, these are every candle is a week. So they went on weeks and weeks and weeks of just red, man. Just so much fear, uncertainty, and doubt being spread, and the stock just kept dropping, dropping, dropping. Now these price might not look like as much because they did a split, but at that time the highest price was pretty crazy and it had such big drops. So that's something that's gonna be interesting coming up. But as far as next week, I would look for pullback opportunities on XOF and try to look for buying opportunities on some of the banks to get in, because we could see a bounce on the dollar index here. This is probably where it's going to hit that support and bounce up again a little bit more. So we could potentially see some pullback here. I mean, the other thing is, it's Christmas. Christmas is also coming up. We're not gonna see a lot of liquidity. Like, not a lot of people are gonna be trading, especially some of the bigger funds. So usually when it comes to liquidity, if we aren't gonna get a lot of traders and stuff, and if people start selling, it's gonna go down a little bit more. So that's something to be more careful about. I probably wouldn't even touch much trades next week. I would just chill back and just hold what I'm holding now. Like, we've been pretty long on gold for a while, so that's a position I'm still in. I'm still pretty bullish on gold. I think we still got a pretty good opportunity for it to continue to go up, because hey, if they're gonna pass the stimulus, gold is gonna be fine, because inflation, it's gonna have more inflation, and when there's more inflation, the price of gold is gonna go up. So that's why I've been bullish on gold, even though like we've been having this ridiculous drop for a while here. But I've been buying gold since the 1800, like 1825, all the way down to here. So I've been loading up on gold. I just been buying this whole area when it was going down. I kept buying. It went back up, came back down again. I bought some more. I just been loading it up, because I'm confident that once they pass the stimulus, the price of gold has got to go up fundamentally, 100%. So that's a trade that I'm still in, that I'm still pretty bullish on, very confident in. I don't think we're gonna lose on it. It's just a matter of buying time. But as long as you're picking up shares, as far as gold, you can pick up shares, or you can pick up very long-term calls as well. So you can pick up shares in GLD. You can pick up calls on that as well. I personally chose a gold miner instead, because I'm betting on the long terms of the gold miner. I'm betting that I'm betting that this company is gonna make more money as the price of gold goes up. So I'm betting that they're gonna perform better and better in coming months. So that's what my bid is. I'm still waiting for that to play out. I was pretty bullish on oil as well. I thought the XOM, like, I hated the oil company. I think the oil industry is getting wrecked. I'm still pretty confident that's gonna happen. But with the oil price going back up, with crude going back up to March levels right here. So this line that I drew, this is the March level line. So if the price of crude, which is oil futures, coming back to that March level, I think that's reasonable enough for, for oil companies. Even though they lost a ton of money, I think retail investor will see them as an opportunity to come back up, and maybe even some of the hedges too. So I think that's a good opportunity for it to come back up to at least this level, around $48. It's trading around 42 right now. I think it's still got a little bit more room to go. And then as far as banks, I picked up Bank of America, because one of my favorite guys, Berkshire Hathaway, they picked up Bank of America. Super small portion though, but they picked it up, so I was pretty bullish on it. I was like, hey, you know what? If Buffett's backing them up, it's gotta go up. So and you know what? He's been doing pretty solid. Like, sure, he hasn't been performing the best, but pretty much all the company he invested in, he's been vetted pretty well. So I believed in them. I picked them up a while back around this area. So it's been having a nice run for me. You know, I got them around 23, 24-ish. So now it's about $30 actually. It's on the chart showing 28.67, but it's about 30 after with the after hour. So I'm pretty bullish on them. I think we still have like more opportunity for it to go up to maybe $34, $35 if the market continues to be bullish and keep running. With that, I think that's pretty much it. Moving to next week and the week after, we're probably not going to trade much because it's the holidays. So we're just making some small bets here and there. I'm also very heavily invested in the special acquisitions market. So I had another video about that. If you guys haven't seen it, check that out. I think that's the biggest thing right now. I think the specs are the biggest thing of 2021. It's gonna be probably the hottest market. It's gonna be like weed in 2017 and 2018. And I see a lot of opportunities there to make easy money. So that's where I'm putting most of my money on right now because I'm scared of the general market. That's pretty much it. If you guys wanna see what I'm looking at for next week and watch list, feel free to follow my Twitter or check our Patreon. Other than that, take care and have a great day. See you guys next week. Bye.